Good afternoon. Welcome to Midcap Radar live from the CNBC-TV18 Motilal Oswal studio. I'm Sonal Putra. With me as always is Vivek Eicher. We are absolutely flat on the Nifty, but there is some negative bias. After that sell-off, there was some recovery from the lows, almost 60 points from the lows of the day. But yes, the mid-caps, they continue to underperform. Bank Nifty is down 0.3%. And there are a lot of individual stocks which are moving on the back of some news updates and some listings as well that we'll talk about. Hey, Vivek.
That's right. The name of the game has been volatility, especially in the last couple of trading sessions. It's been extremely volatile, even as we see a slight bounce attempted, especially as far as the metal pack is concerned. Select metal names doing quite well. But we have a lot lined up on the show, so let's start off with the top headlines. Market sells off from the day's highest point, with the Nifty and the Sensex slipping into the red. Metals and utilities gain, while IT and financials trade weak. The broader market sees deeper cuts.
India's number one e-commerce player Meesho sees a bumper listing opening at a 46% premium to its IPO price. The company tells CNBC-TV18 that its key focus now is turning free cash flow positive.
Anupam Rasayan will acquire US-based specialty chemicals maker Jayhawk Fine Chemicals for an enterprise value of $134 million. The stock rallies over 2% as the management tells CNBC-TV18 that Jayhawk has a monopoly position and will enable access to niche capabilities.
And shares of AU Small Finance Bank trade higher after receiving approval to increase the foreign investment limit to 74% of its paid-up capital from an earlier 49%. All right, those are the top headlines. A lot of them we'll discuss through the course of the day today. But yes, mid-caps, the advance decline ratio, that continues to be in favor of the advances so far. But those lines are fast converging. So we'll track the market breadth going forward as well. The index too has recovered slightly from the lows of the day. But we do have our special segment, Mid-Cap Movers. Sudarshan is here to take us through the mid-caps that are moving around in trade.
So while Sensex and Nifty have made a recovery from day's low, broader markets remain under pressure, especially mid-cap index, which is currently down more than 200 points. Let's take a look at some of the stocks that are making moves. On top of the list is Hindustan Zinc, which is sharply higher, up almost 5% after silver has hit record high. AU Small Finance Bank is trading with gain of almost 3% after it has got the approval to increase the FPI limit to almost 74%. Hubtown is under pressure despite giving a strong set of numbers for the month of November as well as FY26 so far. Delivery has gone down. The stock is under pressure, fallen 2% after Uber has announced that it's going to enter logistics segment of the business, and that's the reason it has fallen. Coforge has fallen for second straight day after the management's commentary related to margin and tech spend. Today also the stock is down more than 1%. So the other mid-cap losers, Keynes Technologies, in the last 3 sessions, one day down 12%, another day up 13%, and today also the stock is currently down almost 8%. PTM has fallen with healthy volumes, currently down almost 3%, and all the capital market names are under pressure in today's trading session as well. BSC down more than 2%, Angel One down almost 2%. But some of the stocks in the mid-cap segment are trading higher. ICICI Prudential, remember, for the month of November, retail AP company had reported a growth of 13%. That was healthy growth, and it was on a very strong base. Because of that, the stock is higher, currently up more than 3%. Vanke's has moved higher for third straight day. This week the stock is up almost 18%. Today also it's up almost 13%. All the sugar companies are trading with gains. Balrampur Chini, Mawana Sugars, all these two stocks are also trending with gains of almost 6 to 7%. And Welspun Living is higher with healthy volumes, currently up almost 7%. And all the companies which have made debut on stock exchanges today are trading with gains. Meesho, Equus and Vidya Wires.
That's right, Sudarshan. Thank you so much for joining us. All of the debutants today doing quite well, especially Meesho. But it's now time to slip into a short break. Up next, we connect with Kotak Securities Shripal Shah and Shrikant Chauhan to decode whether Nifty can scale new highs in 2026.
"26 years.
Welcome back. You're still tuned into Midcap Radar. Kotak Securities expects bulls can take Nifty to 32,032 levels by December 2026, while they have a base case at 26,208. Preferred sectors for calendar year 2026 include BFSI, technology, healthcare and hospitality. To discuss more on this, their Outlook 2026, we are now joined by Kotak Securities MD and CEO Shripal Shah, and we also have with us Shrikant Chauhan, EVP and Head Equity Research at Kotak Securities. Shripal and Shrikant, thank you so much for joining in today and discussing Outlook 2026 for Indian markets. Shripal, let me begin with you. One of the key trends that we saw in 2025 was how domestic investors, they outpaced the flows that we saw from FPIs, and they are the ones which basically balanced the flows and kept the markets going. Do you think this is a trend that could continue 2026 as well, considering that we are seeing a lot of geopolitical uncertainty?
Thank you, Sonal. Yes, you are right. FY 2025 or calendar 2025, I think it is the domestic investors who have held the fort for Indian market. And this flow is not incremental or it is not volatile. It has been a structural change that we are witnessing in India, where Indian market is more becoming a domestic-driven market rather than foreign-driven market. So yes, this structural change looks like likely to continue. By the way, it is not only a FPI or FI flow which domestic institutions are absorbing. There is a lot of selling coming in from promoters, private equity funds, since valuations are attractive, and entire thing is being absorbed by the domestic investors through DIIs and directly participating into the market. So we believe that yes, this trend is structural in nature and it is likely to continue. By the way, I would just like to quote one SEBI recent survey study which says today only 9.5% of Indian household invest into the capital market, whereas 63% of the households are aware about such product exist in the markets. So there is a huge pipeline which is getting built up in India, and I think it is structural change.
Okay, I take that point completely. Shripal, well, Shrikant, we generally see you and we generally ask you for very near-term trends. In fact, we ask you for intraday calls. But today, maybe we could, ask you more as part of a 2026 outlook. You're asking or you're projecting a 12% return as far as the Nifty is concerned from the current levels. And do you feel markets can hit that level? What is your bull case? And also, when it comes to Bank Nifty, what are the key drivers there?
So for this year, I'm going to say for calendar year 2026, we are keeping base case target of 29,120. And it is like something which we can achieve because we are betting on the earnings. The earnings at comfortable levels, if we consider the FY28 earnings, then we are at currently 18 times. We used to be around 20, 22 times, but this time, if we consider the earnings and multiples, then we are at comfortable zone. Also, if we consider the domestic macros, then they are favorable. If we consider the global macros, then they are mixed but not unfavorable. So I think this is something which is a very good combination which can lift the market towards the levels of 29,000 in the best case scenario. In the best case scenario, I'm going to say in the bull case scenario, we may even see the levels of 32,000. But for that, we need a lot of things to happen. And that is not the case that we are expecting on immediate basis. But yes, at least we can see the levels of 29,000. For bank, yes, I think, for BFSI, I'm going to say for the entire sector, if we see the particular asset quality issues, then that is not there. The other part on which we are specifically bullish is the margins. And from here, we can expect some more improvement on the margin because already banks have digested the impact of 125 basis point cut in the market and credit cost issues not to arise in the near term. So I think for this particular reason, we need to be bullish on the market, and for bank sector especially, we need to be more and more bullish.
Okay, so you're bullish on bank. Just to follow up on that, Shrikant, for your bull case on the Nifty, which are some of the sectors that you think will continue to outperform or will be new in the list of outperformance in 2026?
So for 29,000 target, we are betting on BFSI. We are betting on IT because most of these stocks are available at their 10-year valuations. the lower band of the valuation. So most of these stocks are reasonably available at decent valuations, and that's why we need to be bullish on IT sector also. Along with these two sectors, we are bullish on hospitality because there the demand is consistently increasing, tariffs are increasing, and also the India is having advantage of demography. Apart from this, healthcare should be on the watch list because there also we are seeing good amount of capex as well as addition of new capacities. So I think these are the 3-4 sectors on which we need to focus. The first one is BFSI, another one is IT, healthcare and hospitality.
Okay, Shripal, in this particular year, what we've actually seen is that earnings growth, especially in Q2, maybe has bottomed out. Do you feel Q3 onwards, and especially going into calendar 2026, we can see significant earnings growth? And, Srikanth just pointed out a few sectors for us. If you could speak about the IT space, that particular space has seen quite a bit of an earnings downtick. Do you feel that can recover?
Yeah. Thanks, Vivek. So first of all, yes, the earnings for last 6 quarters have been in single digit, and the entire the calendar 2026 outlook is basis the earning uptick. So you are right there. But the reason why we are very optimistic about this earning uptick is first and foremost our macros are in very best shape. The GDP print at 8.2%. The inflation at the lowest point in time, and on top of that, Indian government having stepped in to have income tax cut, GST cut, RBI also having 5 rate cuts during this calendar year itself. So of course, government and central banks are very clear that although GDP print is showing 8.2%, but nominal GDP at 8.7%, doesn't augur well for the earning growth. So yes, a lot of steps are underway and a lot of steps which have been unleashed. We are very confident and very optimistic about earning growth. Current year, we expect earning growth to be around 8%. For next year, and this is where the entire outlook is based on, we are expecting earning growth of around 17% for corporate India, and a year after maybe 15%. So this kind of earning growth momentum, and on the back of good macro and on the back of good government backing on this macro, is where our outlook is based on. Okay. And your second question was on IT as a sector. I'll just try to say IT, we have not factored in any of the AI play in IT valuation in India. Rather, IT valuations have been subdued because of the AI valuation which is going up in the US market. So the point is that beyond the point, IT as a service sector is very strong. And at the end of the day, whether you invent AI or whether you use AI effectively, and in my understanding or our understanding, I think AI can be a big boon in terms of productivity boost for our AI service sector and IT service sector. And that is where, along with the reasonable valuation, we see some value there.
We take that point. Shripal and Srikanth, thank you so much for joining us today with the outlook for 2026 for the markets and a lot more. Wishing both of you a very happy new year. But with that, we'll slip into a short break. When we come back, we'll focus on Anupam Rasayan in our Mid-Cap Spotlight segment. Stay tuned for that.
"26 years of CNBC-TV18."
Welcome back. You're still tuned into Mid-Cap Radar. The stock that we're focusing on in our Mid-Cap Spotlight segment is Anupam Rasayan. Remember, they announced an acquisition, 100% equity stake in Jayhawk Fine Chemicals Corporation, which is a US-based chemicals company. The total consideration is $150 million, but the enterprise value is $134 million because they will also be taking $16 million of cash from Jayhawk Chemicals. The EV to EBITDA, the valuation for this particular deal is 8.9 times. times. Now remember, for global chemical companies, they are trading at anywhere between 3 times to 30 times, depending to the chemistry they cater to, and that's why it is somewhere in the middle of that range. The company, Anupam Rasayan, plans to invest $40 million in this acquisition. This will be via a wholly owned subsidiary. The rest of the money, that is $110 million, that will come from an investment company which will invest that money in the wholly owned subsidiary and ultimately in this particular acquisition. But do remember, these are Class B shares, so there will be no voting rights which will be available. Anupam Rasayan, in our conversation, did indicate that gradually they will pick up this stake, or they will pay the investment vehicle to take up 100% capital or ownership into the acquired company as well. And now the combined financials, how will they be? The revenues at $243 million and EBITDA is expected to be at $61 million. Remember, the current EBITDA margin of the acquired company is at 19%. For Anupam Rasayan, currently it's at 28%. They say it will be an EPS accretive transaction, and we spoke to them in the morning today where they did indicate that they will look to raise capital at an appropriate stage. Investment company's name is not final yet. It is still under consideration. So they do have some names in and offers in hand. So this is a very important clarity that the market will be watching out for. Acquisition will allow them access to niche chemistries, and performance chemicals is just 10 to 12% for Anupam Rasayan currently, but it will be a bigger segment for them after this particular acquisition. They will get access to global customers, and also there will be cross-selling opportunities which will be available because of this acquisition. But a lot of questions to be answered in terms of their debt funding, and also what happens if there are any IRR or dividend payouts to the investment vehicle or not. In fact, let's listen into what the management had to say on raising capital bid and the outlook going forward.
Maybe at appropriate stage, look at some kind of a capital raise or otherwise to kind of fund this back. So this is how we are looking to kind of fund the transaction. This would ensure that we get 100% control over the company, because the investment which will come from the global institution would not have any voting rights. Currently, it's under discussion. As I said, we have multiple options, and this is just one of the offer which has come to us. So maybe at the appropriate time, we will share the details of the same with you.
Well, that was the management of Anupam Rasayan speaking to us after the big acquisition that they've made as far as the overseas market is concerned. But with that, it's all the time we have on this edition of Midcap Radar. Your stocks when we return.
"26 years of CNBC TV